Stocks gain on hopes of a durable truce between Iran and Israel. Metals, auto and financials are the prominent gainers today.
KPIT Tech points to slow deal conversions, delays in project ramp-ups, uncertain demand trends and adverse forex movements. In its mid-quarter update, this spooks the street, the stock dives.
Crude drops 8% overnight to revert levels to before the pre-Israel-Iran war broke out. Fears over the Strait of Hormuz being closed, dissipating also helps cool prices.
US President Donald Trump says an agreement between Iran and Israel has been reached on a total ceasefire, calling the conflict the 12-day war. However, Iran has not offered any confirmation of a truce.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me is Vivek Iyer. You're watching us live from the CNBC-TV18 Motilal Oswal studio. And if you're a bull, what a good afternoon you have for yourself. A 300-point rally on the Nifty, a 4-digit point rally on the Sensex, over 1,000 points, mid-caps doing well, and Nifty Bank doing better as well. And what more do you want when the telecom minister, important comments coming in at the bottom of your screen as well, which says that the government's job is to provide as many avenues, for Vodafone Idea, but more importantly, it is not good enough to have a duopoly. Must have competition in every sector, as India is the only country with 4 telecom companies. All of that has Vodafone Idea's shares up as well, up nearly 5.8%. So important comments coming in from the Telecom Minister Jyotiraditya Scindia. We will try and get in Ashmit, who is sending these lines from this conversation as well, because, up until now, there hasn't been any sort of reprieve coming in on Vodafone Idea when it comes to the AGR dues, and that was what took the stock lower from its earlier highs as well. But that's about Vodafone Idea, one in the many 2,100 stocks which are actually in the green today. So Vivek, all green screen, just like your shirt.
Absolutely nothing to complain about. The war ends, crude oil dips. All of the worries that we started Monday morning with have actually dissipated on a Tuesday morning. Mid-morning, we are having a screen absolutely green. All of those stocks that had seen significant selling pressure, post what was essentially the 12-day war, as Donald Trump calls it, names like the OMCs, all of them had seen correction. Today, the entire pack is doing very well. So HPCL, BPCL, IOCL, all of these stocks doing quite well. But we'll now move on to a very important story. In fact, sources tell CNBC-TV18 that the government is likely to take a call on rare earth manufacturing scheme the next 10 to 15 days. Parikshit, our colleague, joins in with more details.
The Ministry of Heavy Industries and the Department of Atomic Energy are soon going to roll out a scheme for manufacturing rare earth magnets in the country, and this could be done in the next 10 to 15 days. The approximate outlay of the scheme would be around 1,000 crore rupees, and the government will aim to incentivize manufacturing of rare earth magnets in the country at globally competitive prices. Under the scheme, India Rare Earth Limited, which is a PSU in the mining of rare earth, will be asked to provide raw materials to the industry, and they will be providing 500 tons of raw materials of rare earth to companies which qualify under this scheme, and the government hopes to manufacture or incentivize manufacturing of at least 1,500 ton of rare earth magnets on an annual basis. 5 to 6 OEMs have shown interest in the assembly and manufacturing of rare earth magnets in the country, and stakeholder consultations have been completed. Interministerial consultations have also taken place. The government is also looking to allow OEMs which are not able to access the Chinese supply chain for rare earth magnets to import full assemblies, that is full components, instead of just rare earth magnets. And if need be, the tweaks to the domestic value addition criteria under PLI scheme may also be considered.
All right, we take that point. Parikshit, thanks a lot for that. Meanwhile, a bunch of stocks which are spiking right now include the likes of Ultratech Cement. All the cement stocks actually are doing well this afternoon. They've picked some pace. And then you have some of these, ARCs, etc. as well. Edelweiss Financials, Pidilite is the other one, which, remember, crude oil prices declining helps for their raw material further as well. And then you have some of these names like Abbott. So gains are sprinkled across a bunch of sectors and across a lot of stocks. So we'll do the best thing. Take a short break, come back, get you some more trading ideas on this show. We do have a guest joining us. Sachidanand Tikar of Trade Bulls joins in to give us trading strategies and stock ideas after this short break. Welcome back. Let's pull out the intraday chart of Bajaj Consumer. That stock has been buzzing since morning, and this afternoon now it's moving even further. It's up close to 18% with a fair amount of volumes on that stock. An underperforming FMCG stock. The reason why the stock is buzzing is because the company's just announced to the exchanges that they've had a change in management. For FMCG companies, remember, management changes are important inflection points. For Bajaj Consumer, Jaideep Nandi, who had earlier joined from Asian Paints, now has put in his papers on account of term completion. And on his in his place, Mr. Naveen Pandey has been appointed as the managing director of the company. Naveen Pandey has experience with Asian Paints, has experience with PepsiCo, has experience with Marico, as well as the last 2 years he was with Unibic, the biscuits maker. So let's see how this comes about at a time when consumer sentiment is weak, but then again the stock has underperformed a fair bit as well. So the street is betting on the management change to do well for Bajaj Consumer. 18% higher on that stock on appointment of the new MD. The other thing that we're looking at right now, the market setup, when it comes to the F&O moves, if you look at it, it's a big solid rally that we're seeing. 1,000 points on the Sensex, 330 points on the Nifty. At any given point in time, if you bought today, you'd be sitting on money. That's the kind of trend day that we've seen. And it's backed by strong market advance decline ratio as well. So all the frontline indices doing well. 2,100 stocks in the green for just under 450 in the red. And these two lines have not come close to each other through the day. It looks like a parallel train track. That's a positive. And along with all of this, we've seen a decline in the India VIX, which was anyway around 14, has now come below 14. So that is telling you that there is a fair amount of put writing that is taking place as well. More on that in just a bit. It's the high beta sectors which have bounced back. So metals are doing well, up around 4.5% for SAIL, between 3%, 2.5 to 3% for Tata Steel and JSW Steel. Base metals doing well as well. And with the market moving higher, 25,300 conquered on the Nifty, the base is moving higher as well. 25,200 put writers fairly active for a premium of 69 rupees, and the 25,250 put writers equally active as well. The premium out there is around 84 rupees, telling you that the support for the Nifty has moved higher to around 25,150 to 25,200 itself. On the way up, the 25,300 call writers are something that I'll be watching out for, because the premium here is 140 rupees. So if the Nifty sustains above 25,400, then these call writers will have to cover their positions, just the way the current 25,200, 25,300 call writers are covering their positions. 25,400 call writers are also fairly active at 85 rupees. So 25,500, can we make an attempt towards that, towards this expiry, is something that the street is betting on. The only fly in the ointment, with the kind of exuberance that we've seen here, the put call ratio has moved towards 1.2. Typically, it can stay around these levels, but usually between 1.2 and 1.25, we see some moderation. So has today's move, meant that over the next couple of days, we will see consolidation, or will this continue or not? Put call ratio will be the important barometer to watch out for. 3 stocks I'm watching out for: Aditya Birla Fashion Retail, Titagarh Rail Systems. Both of them exited F&O ban yesterday. They may re-enter F&O ban today with the kind of open interest jump that we've seen. And Biocon, which is in F&O ban, 1 day ahead of expiry, perhaps will exit F&O ban. So those are a bunch of stocks that I'm watching out for today.
Thank you so much, Mangalam, for taking us through the internals as far as F&O is concerned. Nifty currently hovering around the 25,300 mark, like you mentioned. 25,500 is where bulls will hope that this particular expiry the Nifty can move towards. But it's a very good time to get in Sachidanand Uttekar from Trade Bulls. Thank you so much for joining us, Sachidanand. First up, you just heard Mangalam. Where do you see the trend as far as the Nifty is concerned, Nifty as well as Bank Nifty? What's your call over there?
Good afternoon, Vivek. Good afternoon, Mangalam. Clearly, when we look at the trend has remained bullish throughout these 7 weeks of consolidation. Now, if you look at the Nifty, the potential for today, looks clearly bright for a rally to extend towards 25,425. We are of the opinion that eventually the market could see a swing towards 25,555 during this particular series itself. So I think it's a very healthy consolidation breakout that we have observed. Even if you look at Nifty Bank, the hurdle at 57,000 is expected to be surpassed. Eventually, we see this index also scaling towards 57,700. So on both the indices, the bias remains positive. From a momentum perspective, for the Nifty, I think 25,130 would be a very important support. Until unless we trend above this particular level, the possibility of a quick move towards 25,555 or an extended move towards 25,630 remains bright. So keeping a stop loss at 25,130, we still recommend building long positions when it comes to Nifty. For the bank Nifty, if you look at the contraction, the support at 56,630 is very critical. The gap up opening has been very strong. So I think keeping a stop loss there on a closing basis will be healthy, and we may see an extended rally towards 57,710.
All right. And individual stocks, Sachi, are you betting on the long side right now, or are you taking any counter short positions as well?
Well, we have been on the long side throughout this phase of consolidation as well. Nowhere we have seen any distortion of trend. So if you look at the Nifty Bank, I think the contribution will be significant. And if you look at the structure of Kotak Mahindra Bank, despite of market volatility, this particular stock continued to display a higher top, higher bottom sequence. Even right now, the kind of breakout that we have observed is the inverse head and shoulder formation breakout at 2180. Even if you look at the options data, 2200 call writers were very adamant. And with today's breakout in place, we see further unwinding of positions. So we are expecting that this momentum will continue towards 2305, eventually towards 2360. And that's why we are recommending building long positions in Kotak Mahindra Bank even at this juncture. The stop loss for the trade can be placed at 2195 on closing basis. The other stock which we have recommended to our clients is ABB Limited. Now, even here, if you look at the overall sequence for the last 3 trading sessions, the stock managed to sustain above its 50-day exponential moving average support, which is placed somewhere close to around 58.50. We have seen a reversal candlestick formation in yesterday's trading session, and the opening has been very significant. There are fresh long positions which have been added. So we are expecting that the rally may extend towards its 50-week exponential moving average, which is placed at 6160. The second target would be 6240, and hence we are recommending building fresh long positions in ABB. Even at this juncture, one can chase momentum with a stop loss at 6010.
Thank you so much, Sachidanand, for joining us, giving us both your view on the markets as well as your individual trading ideas. Well, a couple of stocks, that come to mind, given the fact overall it's a very green screen, but 2 stocks, both of them oil explorers, seeing and coming in for a bit of profit booking as oil takes a bit of a nosedive. ONGC, this particular stock down over 3% today. And the other stock that's taken it on the chin today is Oil India. So both ONGC as well as Oil India are 2 stocks that are under a bit of pressure today. Well, it's now time for a quick break. On the other side, Manisha Gupta joins in with Ashwin Selvaraj, Chief Strategy and Digital Transformation Officer at Roundtable on sustainable palm oil. Stay tuned. Welcome back to Halftime Report. Well, some time ago, Communications Minister Jyotiraditya Scindia bats against telecom duopoly, saying competition in every sector is a must. Let's listen to excerpts from that particular conversation.
Today we have fiber, we have broadband, we have Wi-Fi, we have mobile, and soon enough, we will also have satellite. Our job is to provide as many avenues as possible, and within each vertical as well, provide intense competition. It's not good enough having a duopoly or 1 carrier or 2 carriers. You must have competition in every sector. India today is probably the only country in the world with 4 telcos.
There's a word coming in on telecom companies by Jyotiraditya Scindia, and these comments have actually, infused some life into the stock of Vodafone Idea, something that we spoke about earlier in the show as well, and now we heard straight from the mouth of Jyotiraditya Scindia. But let's move on and cover commodities. Manisha joins in, and with her is Ashwin Selvaraj. Manisha.
Well, thank you so much for that. And Ashwin is going to talk a very important topic with us. Ashwin, thank you so much for joining in. Ashwin joins us from RSPO, by the way. And Ashwin, more and more markets and more countries and more sectors are now talking about the European Union deforestation agreement that comes into effect from 1st of January 2026, unless there is another extension, really. But how would you look at the overall compliance that we see coming in from various countries?
First of all, thank you so much for having us, Manisha. It's a fantastic opportunity. No, the European Union deforestation regulation is coming into effect, as you said, end of the year. And and the regulations apply across several commodities, including coffee, cocoa, palm oil, wood, cattle, and others. If you look at the compliance readiness, I think the palm sector is one of the is actually a better placed compared to a lot of the other commodities, because there's been a lot of awareness and work being done in the palm oil sector over the years on deforestation. So the level, and as an organization, we've also been working with a lot of the producers in Malaysia, Indonesia, and Latin America and Africa to address the issues around deforestation, which has built up the level of readiness of a lot of these players to be compliant to the European Union deforestation regulations. One of the key elements of the EUDR is the requirement on capturing the geolocation of the farm where the palm oil is produced. And traceability systems have evolved across many geographies, and we've also been providing traceability services to our members globally. And the information is more or less available across many geographies. And if you look at India in particular, the Indian palm oil production is actually much better placed than most of the other palm producing regions, primarily because our market is highly regulated. We are converting agricultural lands. The risk is low. And the penetration of digital technology in India is quite high. So you see a lot of the farm plots are already mapped, and the mills who work with the farmers to process the fruits already have this information. So we are actually at a much better level of compliance for EUDR.
I also wanted to understand, Ashwin, I mean, there's one part that is about farmers, and as you said, the tech penetration is quite strong, better regulation, and geolocation sharing is also something that many sectors now seem to be doing that. But when it comes to companies, how has that number been? Do you see them compliant ready as well? And the other point really is about products, snacks, etc., where you have all of these usage of many of these products. Is that back end and front end compliance also in place?
Sure. I mean, if you look at the production of palm oil globally, almost 25% of the global production is certified according to the RSPO standards. And the deforestation and the capture of geolocation is already inbuilt into our standards. So in terms of compliance readiness of the production side, definitely, I think it's quite high. And if you look at the downstream, almost 10 million tons of palm oil is actually bought under certification globally across different markets. And many companies downstream have also built their own traceability mechanisms to capture this kind of information. So if you look at the products and the scope of EUDR, the snacks and the namkeen and all of that, I mean, those are not in scope for the EUDR. So what is applicable is really, what is in scope is really crude palm oil, refined palm oil, fractions, and some oleochemical derivatives. So I think the readiness of the industry, downstream industry, is also quite high, because if you look at the European market, they buy anywhere between 2 to 3 million tons of palm, if you exclude biofuels. And a significant portion of that palm oil is already bought according to the RSPO certified EU deforestation-free supply chains. So the information is there. So what needs to happen in the downstream industry is to actually compile this information and share it with the competent authorities in the European market. So the digital systems, the traceability systems, the readiness of the downstream market in Europe is quite high.
You said the Indian markets numbers also seem quite on the higher side. The compliance readiness here also is quite positive. I mean, we have huge, big companies, listed companies here as well. Would you say that they are all, one, buying certified palm, and the other is, are they absolutely compliant when it also comes to exporting palm-based products to European Union?
Yeah. So if you look at the certification part, I mean, it's important to understand that certification is a tool to establish compliance. So by being certified doesn't mean necessarily you're compliant to UDR. It makes you compliant and it gives you the information that the UDR systems require. So if you're looking at the Indian downstream industry, a lot of them are, the listed companies are reporting into the BRSR regulations. So there's also already a lot of awareness about ESG. And a lot of these companies are already procuring certified raw materials. So if you look at the imports that's coming into India, I think close to about 400,000 metric tons of palm oil that's bought into India is coming in as RSPO certified. We think this is just based on voluntary declarations, and we think the number is slightly higher than that. So the Indian industry is also pretty much ready in terms of compliance. And if you look at the exports, the export of palm-based materials is going out of India. So I think on an annual basis, based on a study we did, anywhere around $200 million is the worth of exports that we see going out of India. 200,000. And this is only expected to increase or double in the next 3 to 5 years, is based on our prediction. So currently what we see is that the products that we are exporting is not directly in scope of EUDR, because I said a lot of the finished goods are not in scope. But a little bit of the oleochemicals that are being exported, I think the companies are already working on compiling that information. And we are also working with a lot of our members to help them capture this information from the origin. So we've built a whole traceability platform that facilitates the availability of this information to export companies that are looking at exporting palm-based products out of India.
Okay, thank you so much, Ashwin, for joining us, and thank you so much, Manisha, for joining us and giving us a sense of what exactly is transpiring as far as the world of commodities is concerned. Well, we'll now slip into a short break. Once we get back, we will get chatting with Vikrant Kshotriya, Managing Director and Corporate Vice President, Novo Nordisk, to discuss the upcoming launch that the company is planning.
Welcome back. Let's look at a bunch of names that are doing well. We have Honasa, which has spiked in trade. It's been an underperformer, so some bit of purchase seen out there. And a lot of these, we have quick service restaurants picking pace as well. Westlife Food, for instance, has now spiked to the high point. And this morning we spoke about how, because of the Iran-Israel truce, all the rice companies are seeing some purchase. Look at LT Foods, now up 8%. And we have KRBL as well, fairly well bid in today's trading session, up around 7.5%. So a bunch of stocks seeing a lot of bidding and relief rally as well. But let's talk about Novo Nordisk. That's launched Wegovy. It's GLP-1 therapy, which is based on semaglutide in India for the treatment of obesity. So this is the one that everyone has been waiting for, with 40% plus Indians classified as overweight. This is Indian adults that I'm talking about. The country's GLP-1 weight loss market is projected to exceed $350 million by 2030. This launch actually marks a significant milestone in Indian healthcare. So Indians, Novo Nordisk's semaglutide drug Wegovy is here. In fact, Ekta caught up with Vikram Shroritya, who's the Managing Director and Corporate Vice President of Novo Nordisk India, and spoke about, most importantly, the pricing structure plans and a lot more. Listen in.
What we have done is we have tried having a smart pricing, or you can call it a smart pricing band. So to start with 0.25, we have actually priced it at rupees 17,345. When you come to 0.5, now there is no increase in the price. We have kept it at 17,345. For 1 milligram, again, it's the same price. And they are packed differently. Then it comes to the 1.7 milligram, it is 24,218. And 2.4 milligram is priced at 26,015. So the first three initial stents are actually priced at the same level, so that when the patient initiates, they can actually do the titration upwards without pinching on their pocket.
Okay. But do you think that you need to get more competitive when it comes to pricing, especially because we do have that patent cliff which is looming in March 2026? We are going to see competition, generic competition, come into the Indian market just in the span of less than a year.
I think what we have priced is we have priced it for innovation at this point of a time, and it is rightly priced for India. And if you really see many of the countries, across the world, we have really priced it at a level where we have kept the same pricing for all the three stents. When we will have the generic competition coming in, I think we might have to see and evaluate a scenario, what should be the accessibility point and what is the competitive, pricing which is going to be there in the market.
Okay, all right. But how do you plan to challenge the kind of competition that we will probably see in March 2026? Considering how price sensitive a market India is, we are going to see a lot of genericization probably of these weight loss drugs of this particular molecule?
And I think, we really respect the Indian industry. I think they have a game to play in terms of the healthcare space, and they are really doing the justice. Now, when it comes to the time when they launch their molecule, this is something, it's a natural course of any medication that they go under the expiry of the patent. So this is not something new. And just to let you know that we have been offering human insulin and insulins in India. They are one of the largest categories out of patent, and there have been many, many players across India who have actually launched and who are offering their products in the insulin market. But still, we have 1 out of 2 patients who are on insulin, they actually take Novo Nordisk insulin. Those are peptides, and semaglutide is also a peptide in injectable form. So I think they will have their play. They might also serve the need of the Indian patients, but we also believe that being first in the market and with our credibility, our trust over a period of time, we would be able to lead the obesity fight in India.
Is Wegovy going to be imported into the Indian market, or is there any kind of local manufacturing?
Yeah. You are absolutely. No,
so there's no local manufacturing right now?
We are going to import No, right now we don't have plans for any local manufacturing. We have actually invested more than $20 billion in terms of APIs as well as fill and finish. And I think we have economy of scale to really produce for the world. And we will be currently importing it from headquarters.
Any plans in terms of a distribution tie-up, at least with Indian pharmaceutical companies? The reason I ask is that they have more feet on the ground. It becomes probably a little more cost-effective for MNCs such as yours to probably tie up with an Indian company, at least for distribution. Anything on the cards?
I think while some of the players talk about the collaboration now, we have had collaborations for more than 3 decades for manufacturing as well as for distribution, which is with Abbott distribution. Now, this is something which we know, but we also know at this point of a time that we are one of the strongest player when it comes to metabolic diseases. And we have really done the justice when it comes to insulin, when we have launched the oral semaglutide. So at this point of a time, we will be launching ourselves. But should there be a need in future, I think there is never say no, and we will evaluate the scenario and see if there is a chance to join the partnership.
Have you spoken to any Indian pharmaceutical companies as yet?
Not as of now.
Why not Ozempic?
Yeah, in India, we have already launched oral semaglutide. And when we see the Indian diabetes care market, predominantly 3 out of 4 patients take oral treatment. And that is the reason in 2022, we launched oral semaglutide, and which has been accepted very well by the Indian patient population and also by the doctors. Now, for obesity, we really have the pleasure of launching injectable semaglutide in 5 strengths. That's 0.25, 0.5, 1 milligram, 1.7 milligram, and 2.4 milligram. This addresses the real need for the obese population. As you just now said, the adult population, 40% are actually overweight or obese. This amounts to more than 250 million people. So this is really a milestone movement for us to bring the access of this innovative products to arrest obesity in India.
Okay, but oral semaglutide, which is basically Rybelsus, the drug which is already being sold by Novo Nordisk in India for type 2 diabetes, the efficacy is supposed to be less than the injection. Data indicates that it's around 3 to 5% versus the injection, which is much greater, which goes into early teens as well. So give us an indication on why exactly wouldn't you launch the injection, which has more efficacy for type 2 diabetes then?
No, I think we have seen the efficacy of oral semaglutide as much as injectable in type 2 diabetes. Whereas for obesity, it goes from 0.25 to 2.4 milligram, much more higher titration for the weight loss, wherein 20% weight loss is seen in 1 in 3 individuals who have actually taken this medication. Now, having said this, we are also testing it out, the oral semaglutide in higher strengths also for the obesity. So when it comes to the lower strength, I think both the injectable and oral are efficacious.
Right, well, thanks a lot for that, Ekta, with that conversation. Wegovy finally coming to India. Vivek, there are a lot of companies which have made their inroads towards getting into the semaglutide market in India, starting 6 months from now to about 12 months, etc. What a trend this has been, right? Have you, you know of a lot of people who are in this bandwagon?
I know of a lot of people who are interested. A lot of them are waiting for generic companies to come in because this, I think, will still be quite expensive. And I think a lot of people are also waiting for effects to be seen or any side effects in case. Wait and watch for a couple of people to take it and then maybe jump onto the bandwagon.
I should ask you, but you don't look like one. Will you ever be interested or tempted?
Maybe later in the future, but hopefully hope to stay fit and slim.
Hope to stay fit and slim. All right. So that's about, Wegovy coming into India and launching a lot of semaglutide. I'll be very interested to know, what happens to the FMCG companies, because I spoke to Varun Berry. He said that once semaglutide comes to India, the kind of people who are taking it, their diet requirements will change. For that, these guys will have to come out with those products as well. Of course, it's a very small market, but a market which has a lot of affordability as well. So from a value standpoint, will be extremely interesting to target and look at. But we'll take that short break, and as we do that, some good news for you viewers. It is the CNBC-TV18 all-new app which we're launching, which is basically the India's business news leader right at your fingertips, which gives you access to all the news, the breaking news, all the in-depth analysis, and all the articles from the financial world coming to you right at your fingertips, at your discretion. All you got to do is download the app either from the Apple Store or the Google Play Store, or just scan that QR code right up for you on the screen.
Welcome back to Halftime Report. Very interestingly, in the last half hour, what we've actually seen is a bit of correction. The Nifty Bank, all cooling off a little bit from the day's highest point. In fact, the Nifty now hovering around the 25,200 mark. A slight correction is what we've seen. But a very interesting analysis is what our colleague Sudarshan has for us. Post the ceasefire, there's been a significant unwinding of the positions that were taken, especially as far as the crude oil sensitives were concerned. Sudarshan joins in with that analytical impact.
So from yesterday's high of $81 per barrel that Brent crude had hit, now it's trading below $69 per barrel, a fall of almost $12 per barrel from yesterday's high. Now it has an impact on some of the companies. For example, upstream oil companies like ONGC and oil, that means Oil India, it impacts negatively. So if there is a fall of $1 per barrel in the crude, it impacts in the range of rupees 300 to 400 crore in its annual revenue. But in contrary, it has a positive impact on downstream oil companies like OMCs, and those are BPCL, IOC and HPCL. In the scenario of a $1 fall in crude, it impacts positively in the range of rupees 200 to 300 crore to annual EBITDA of these companies. Also, fall in crude is positive for paint companies because up to 50% of input cost of these paint companies are linked to crude. So if there is a fall in crude, fall in raw material costs basically impacts positively to margin of these companies. Also, at the end, it's positive for airline companies because aviation fuel, that is ATF, aviation turbine fuel, is one of the major input costs of these companies. That's the reason you are seeing a divergent move while ONGC and Oil India are down in trade and OMCs, paint companies and airline companies are trading higher.
All right, we take that point, Sudarshan. Thanks a lot for that. Just keep an eye out on Reliance. That's the one that has moved off highs significantly, currently contributing to the downtick that we're seeing on the Nifty from today's high itself. With that, what we'll do is take a short break, but remember to tune into the all-new CNBC TV18 Prime, which brings you insights from policymakers, business leaders, economists, all of them shaping both the India and the world's future from an India standpoint. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. You can tune into CNBC-TV18 Prime at 12 noon for Global Reset, at 1 p.m. for the Big C, which puts all the lens or the spotlight on the commodities space, and at 8:30 p.m. for the Global Lens. So that's a lineup of shows on CNBC-TV18 Prime in the all-new avatar.
Welcome back to Halftime Report. While just 5 minutes back, we told you about how the market had seen a bit of moderation. It's once again picked up pace, and Nifty once again has gone back about the 25,260 levels. What's aiding the market move higher? In the last half hour of the session, we've actually seen the pharma names do quite well. So some of the pharma heavy rates, look at names like Sun Pharma, look at names like Dr. Reddy. Both of these stocks now trading near the day's highest points. Remember, for the entire pharma pack and quite a few of the export-oriented sectors, July 9th is an important date, which is when you'll get some clarity as far as tariffs are concerned. What's also seen a bit of a comeback today is the entire two-wheeler pack. Last couple of trading sessions, they were under a bit of pressure on imposition of the ABS norms. But today, look at names like TVS Motors, Bajaj Auto, as well as Eicher Motor. All of these names doing quite well. In fact, all of them trading near or at the day's highest points. But Mangalam, one stock that you've been tracking is Page Industries. Goldman Sachs has initiated coverage, or what is it that they have to say?
Well, there are a couple of things that Goldman Sachs likes about Page Industries. One, that their analysis suggests, and this is the analysis of the other, listed companies and their inventory levels over the last few years, tells you that maybe now inventory levels are moderating. And as a result of which, the growth forward for Page Industries looks good in their core innerwear segment. And they've initiated coverage on the stock. They have an outperform rating, a buy rating rather, target price of nearly 52,000 rupees. Why? Because of inventory levels normalizing in the industry, they believe that for the next 5 years, Page Industries' revenues can actually compound at over 12.2%. Compare that to the last 5 years, it's compounded at almost 8%. So it's a near, 4 percentage points increase in compounded revenue for Page Industries. So the next few years look better than them, better than the last few years for them. The second part is that innerwear is one part. Outerwear is likely to grow a lot faster. And apart from them launching new products, consistent recovery in growth, the other driver for outerwear will be them increasing their share of exclusive brand outlets. Remember, the management has said that over the next 3 years, they will add nearly 200 to 250 exclusive brand outlets every year. And remember, exclusive brand outlets have a higher share of revenue coming in from outerwear, which is a higher value product and a higher margin product as well. So those are factors that could be growth drivers for Page Industries. That explains why the stock is up by about 2%. The important part, however, is that the market too seems to have recovered. From the time when we started the previous segment where the Nifty was closer to 25,185, that dip has quickly been bought into, and we're back around that 25,200 mark. The reason why the market fell was Reliance, and the reason why the market has recovered is Reliance as well. So pull up the intraday chart of Reliance. You would see an up move, thereafter a dip, and from there dip, a bit of a recovery for that stock as well. Still away from its high of today, but has seen a recovery from the lows. With that, what we'll do is wrap up on this edition of Halftime Report with all the indices in a bright shade of green. You stay tuned to CNBC TV18. Business Lunch comes up next.